Hello everyone, I wanted to make a video to give an example of how to use moving averages. I talk a lot about moving averages as in EMA levels in my Telegram channel, and sometimes I feel that people don't understand what they mean and how to trail your profits or how to use them as trailing stop losses and basically what EMA levels actually mean. So I use only three types of indicators on my charts: volume, moving averages, and RSI. We'll talk about RSI in a separate video. It is an oscillator which is amazing, and based upon it, we can lose the fear of missing out on a stock and gain the confidence to keep a stock and not sell it off when it's run. Anyways, we'll talk about that later. This video is about moving averages. I use moving averages multiple indicator, and it has the option of using 6 moving averages at the same time. The maximum number I've ever used is 5. My favorite ones are 10, 20, and 50. 100 and 200 are as backups. To set these up, you have to enter these numbers in inputs. In the style, you can choose the colors of the EMAs you want, and here you can activate or deactivate the ones that are shown on the chart. So 1, 2, and 3, that is 10, 20, and 50 are being shown right now, and 4 is 50, 100, and 5 is 200. I keep these off because these are usually a bit away from my setups, but I use them if the stock goes below 50 and I need to see where the 100 EMA is. Visibility just means on which time frame charts you want it to be shown. We'll keep them on for all of them. These are the settings. The main thing is that in this method option, we have to choose exponential. By default, it will be chosen as simple moving average, and we have to change it to exponential. The difference between them will be clear once I explain to you what moving averages actually are. So, when we say that this white line is 10 moving average, a moving average means the average of the candles behind the current candle. So this is 10 EMA, 10 moving average, and 10 moving average means the average of the last 10 candles. This 2, 3, 4, 5, 6, 7, 8, 9, and 10. These candles, the average movement of these candles is being depicted by this line. This is 20, so the average movement of the last 20 candles. This is 50, so the average movement of the last 50 candles is being depicted by this line. Difference between simple moving average and exponential moving average is that in a simple moving average, the average point is taken at the center of the candle. Every center point of a candle will be taken as an average, and based on that, the simple moving average is calculated. In an exponential moving average system, the whole pricing of the candle is taken in account. So when we want to, this line knows that this candle is this big, whereas a simple moving average just knows the center point. It is taking everything as a center point. That is why we want to use the system which takes the whole pricing into consideration, which is exponential. Now, what these moving averages do for us? These run beside our stock price and give us an idea of the resistances and the supports that are there on the price as they move. They are different for every time frame. For example, in weekly time frame, the 10 moving average, which is depicted in white color, is at 5298. But if I go to the daily time frame, it is at 5396. If I go to hourly time frame, it is at 5587, because these are averages of the last 10 candles in whatever time frame you're looking at. So this EMA level in hourly time frame is the average of last 10 hours. This same EMA, 10 EMA of white color on the daily chart is the average of last 10 days. And on the weekly chart, the same 10 EMA will be the average of the last 10 weeks. This is what moving averages means. Now, how do we use them? Each moving average presents the stock price as a barrier. Once this barrier is broken, it moves above it or below it. Before the barrier is broken, it can keep surfing on that barrier. So this is the chart of Polycap, and we are going to just take some examples and see how moving averages can help us stay in a stock and get out of a stock, and realize that it's not yet time to get out of a stock, and sometimes realize that even without movement, that we can see that okay, it's now time that we need to move out and get out of the trade. So let's first go on a monthly time frame and see how well the moving averages have worked. So as you can see from beginning, when once it charted above the 10 EMA level, which is the white line, it kept surfing above it. And here in June 2022, it broke down and gave a closing below 10 EMA. This would have been a time where people could have seen, okay, now it has broken down 10 EMA. There might be some continued downfall, or the stock might stay in the same range. So what do we see the next month? The next month we see a smaller candle, and it's the whole month it stays within the range of this candle. So one whole month of holding, it would have been, the price has been between the same price that it was the previous month. But in the end, we see that this candle closed just above 10 EMA. So this was a positive candle, that even though it came down, there was no further breakdown, but it bounced back and closed above 10 EMA. Why is that? See, the green line is our 20 EMA. Plus, there is a big horizontal support here. We'll see on the weekly time frame, we'll understand why it's a big support. So it came exactly to the support line. This was the high of this candle and the low of this candle. It bounced back, and right beneath it was also a support of 20 EMA. All these all these levels, whenever the candles are above it, these are supports. Whenever the candles are below it, these are resistances. So if they are breaking it, that means that the level will try to support them and keep it above it. And if they are breaking it from the bottom side, then the levels will act as resistances and try to keep the stock price low. So again, we see that the stock price is continuing to serve the 10 EMA level. Here we see a big breakout, and again it is way above 10 EMA, and the stock is going to the sky. This is the monthly time frame. So if somebody was trading based only on monthly time frame, there is no exit. There only one exit is there. All right, there might be some downfall from here, but the next month it came back above 10 EMA. So there is technically no exit from the stock. Somebody could have bought it for 500 rupees, and it is today 5,600 rupees, if they were only looking at the monthly chart and never looking at the smaller time frames. And now we'll go to the weekly chart. This is the weekly time frame now. The weekly time frame, the stock was going above 10 EMA, but then at this point, it took a small fall right here, but even though it closed below 10 EMA, you will see right here, but it's got up again and kind of gave a breakout of 10 EMA, never touched 20 EMA, never took support from 20 EMA. 10 EMA was all that it was needed. Here it came up and then there was a big fall. It came exactly to 20 EMA levels. It took support from 20 EMA levels and bounced back to give closing here. Next month, again, the chart closed below 10 EMA. So this was a negative period for this stock. If somebody was looking at the weekly chart, that there is some weakness and it might break the 20 EMA levels to go to the 50 EMA levels. This is how we decide targets. That if a candle is broken and has sustained below 10 EMA level, so what can be the next target? The target can be the 20 EMA level. That the stock will go till here. Doesn't always work, but that is the technical basics. And here we see that the candles are going between 10 and 20 EMA. Now see, the price here has come below 10 EMA, and now the 10 EMA level has become a resistance instead of support. It is going up and coming down, again trying to break it, then coming down, again trying to break it, coming down. Instead of being a support all this time, now it has become a resistance. Here the candle gives the breakout, goes above 10 EMA, and then serves above 10 EMA again. So every time the candle goes above a EMA, we can say that it is an EMA breakout. Now let's say we were waiting for this at this point, that the stock is going flat and it is exactly near 10 EMA. We know that it supports 10 EMA supports the stock very well, and it will give a breakout. And it gave a breakout right here, and we entered here at this week at 3867 levels. Now what could be our stop loss? The initial stop loss could be the 20 EMA level. Okay, all right, it might break 10 EMA level, but will take support from 20 EMA level. And if the stock gives closing below 20 EMA level, then we are going to exit as a stop loss. So here we see that this was a big breakout. We took an entry here, and then the stock is going up and up and up, and not even touching 10 EMA. Here it has come. It is again in a flat range, and now if somebody was trailing their profits with 10 EMA, they would have booked here. All right, this week the stock has closed below 10 EMA, and now I am going to book out. So what would have been their profit? They would have bought at 3,800 and they would have sold at 4,900. That's a great trade, right? And all they needed to do was trail with 10 EMA. Even though after again a few weeks, it again got back above 10 EMA. And see, then this can again be your entry point. You've booked here, but you're now watching the stock. Okay, the next week it did not close above 10 EMA. The next week it closed above 10 EMA. So now I'm going to enter again and keeps surfing the 10 EMA. This is how you trail your profits with 10 EMA. This is also how you keep 10 EMA or any other EMA as your stop loss. So how do I decide which stock is going to be based on which EMA levels? Let's take some other stock. Okay, so here is a chart for Phenolics cables, and I entered somewhere around here where the entry mark is, based on a support candle and based on horizontal level breakout here, and then it's taking a support, so we're taking a support based entry. And okay, so now what is my trailing stop loss for it? When I've entered at this candle, I've taken entry here, so I would keep my trailing stop loss at 50 EMA. Why 50 EMA? Because first of all, it is crossing 10 and 20 EMA at this level only. It has just crossed it. And let's say if I had taken a trade here, let's say if I had taken a trade here, so I can see in the history that in the recent history, it is going between 10 and 20 EMA. Sometimes it has come down to 50 EMA, but it has never closed before under 50 EMA. So now 50 EMA is going to be my trailing stop loss. That if in a week it closes below 50 EMA, then I'm going to understand that okay, the trend is reversing, even though it goes up and down, but it never closes below 50 EMA. So I'm going to keep 50 EMA as my trailing stop loss for Phenolics cables. This is an example of how to use a moving average as a trailing stop loss. I hope this was helpful and this could make you understand why I use trailing stop losses based on EMA levels and horizontal levels, because they work, and the best thing is that they move with the stock. I don't have to calculate a level key. All right, this is 777 is my recent swing low, and then what would be the next? Then it would be this. I don't have to calculate anything. Every week I just have to see where the moving averages, and the next week it will be here, and the next week it will be here, and the next week it will be here. On every Saturday I'll just update my trailing stop losses based on the moving average. That is the idea, because there is less calculation and the moving average moves with the stock. It trails for you just like you want it to. That was all about moving averages. If there are any questions, you can leave comments. You can talk about it in the discussion group, in the Telegram group, and I'll see you there. Thank you.